Carvana. Let's talk about that one.
This one's interesting. So for Carvana, we're looking at Q2 EPS estimate at $1.10, which is 686% year-over-year growth.
Did you post this?
Yeah, it should be posted.
Do not see it right now. I'm scrolling back to yesterday or last week.
Oh, I might have not posted this yet. Here, I'll post it right now because I have it done. Oh, I got sidetracked. Whoops.
That's
All
fine.
right. Let's go
post it.
into here real quick. And
While he's doing
boom.
that, guys.
Cool. There it is. So 686% EPS growth. Revenue, we're looking at 4.56 billion, which is up 34%, a little more moderate. 2025 EPS estimate, though, is $5.04, which is up 217% year over year. The price target from Oppenheimer that they just dropped, by the way, is $450 a share. Year-to-date performance up 100% since its April lows. And why are the bulls gunning this right now? Well, one, the retail sales units are soaring. Carvana isn't just selling cars, it's selling a lot of them. In Q1, retail sales units jumped 46% year over year, cracking 100K for the fourth quarter in a row. Q2 is expected to follow suit with 135,750 cars sold, a 33.8% surge year over year. Now, why the boom? Blame or thank tariffs and interest rates. With new car prices hitting records, shoppers are flocking to used options. Now, number two, margins are going turbo. This isn't the same Carvana that burned billions during the pandemic. Thanks to smarter inventory, leaner staffing, and way less ad spend, margins are on the move. Its ad spending got cut. Reconditioning is streamlined and logistics boosted by the ADESA acquisition. This is the magic of scale in tech. Carvana's EBITDA margins now lead public auto dealers at 11.5%. And then Wall Street's also falling back in love. Oppenheimer just went from meh to moon, upgrading the stock to outperform and slapping a $450 price target, which is 30% upside. BTIG raised theirs to $395, and JP Morgan even got in on the fun and just hiked to $350. Now, why? Traffic is up 7% with margins expanding, and Carvana is finally executing at scale, which was always one of their big problems. Even traditionally skeptical firms are warming up. The stock's average target now sits around $370 a share. But where there are bulls, there are bears lying in the wake, just waiting to cut their legs from under them. Now, number one, it's pricey AF. Carvana trades at a PE of 116x, typically, which is insane. That's nosebleed territory. Compare that to CarMax or Sonic Automotive, and you see why some folks are calling it overheated. Is it justified if they keep smashing earnings like this? But one misstep like a soft quarter or disappointing guidance could send this thing back under $300 fast. Now, that debt load also is not light, my friends. Carvana still has a 2.97 debt to equity ratio. And while they've made progress cleaning up their books, they're not out of the woods. Higher reconditioning costs, thanks tariffs, could pressure profits. If interest rates stay sticky, it makes that mountain of debt a bigger problem. And then also, the big thing, and this is why I said it's interesting, insiders are cashing out. Insiders have unloaded 700 million plus in shares this quarter. We're not saying they don't believe in the long-term story, but they sure aren't hodling. That kind of selling pressure raises questions. Do they see a ceiling here that we aren't aware of yet? Now, our take on this is Carvana is crushing expectations. It's scaling smart. It's getting leaner, faster, and more efficient. And Wall Street is starting to take notice, which is the first sign of good things to come. But we're also not blind to the risks here. Valuation is steep. The balance sheet still has red flags. And if used car demand fades, margins could get absolutely crushed. If Q2 beats again and guidance goes higher, Carvana could rip to 400 plus in a flash, but if they stumble, buckle up because this could be one of those 15% overnight losers that we see, like a Lululemon type of situation. So it's not, think about it like this. Carvana has now moved away from being we sell used cars to now we're an e-commerce platform that happens to sell cars. And that's kind of how they're trying to position themselves moving forward. So they have a wider user adoption and they can keep pushing those units out. But again, we do still have those risks with it. And it is an expensive stock to get into with a very high risk and very low price targets that could crush you and your portfolio.
Yeah. Something interesting I want to point out. Let's start off with the chart here. So I've shown you guys this picture of Carvana from before where we've got this huge, we've got accumulation, distribution, redistribution, reaccumulation down below, and two portions where we had reaccumulation and headed up. The big question we want to ask here is, are we really expecting this to be another distribution, or are we going to head up higher before we distribute? The thing that you want to keep in mind for something like this is looking to see if we've created and can see some sort of actual buying climax. So we're going to look back here. This technically was the beginning of the buying climax where you see these huge spikes of volume down below. Making sure you see that. There we go. Huge spikes of volume. And then, yes, in this situation, it did head up higher and things like that before it redistributed. But we do not necessarily see that type of behavior just yet with where we are. So I do think that we very likely could see a bit higher for Carvana in due time. But the earnings report, I think, is it's a risky bet right now. And I'm going to give you my reason why. First, let's take a peek over here on the right side where you can see the past 4 or 5 earnings that we have here. And take a quick look as to the percentage surprise. So in Q2 of 2024, they had a 946% surprise, okay? So if we take a look back over on the chart here, Q2, let's go further back, okay? That's where we see these big pops, okay? So here we saw a big pop because of something like that with earnings. Then we saw 111%, which in this situation popped and then came back down over the course of the next few days and went up higher later. Then we see 140%, right? So pop again. Then we see this one right here where it had a great earnings, but then it dropped below. So what I want to point out here is more so the fact that the expectations are definitely there for Carvana. And you want to understand the expectations as a whole. People are thinking, hey, they're reporting such good numbers, they're doing well. This estimate is probably on the low end. We are expecting a percentage beat. Question is, what is that expectation? And with the most recent ones, yeah, it's very possible people are expecting a very large beat already, and that may be already priced into this situation. I will point out that the pattern on the chart shows a bit more of a bull flag pattern, but it is a situation where I can see this being one of those double beats where we see it sell off. We'll probably see a spike overnight, see it retest some of these highs even, and then we'll see it sell off throughout the day because a lot of it's been priced into its earnings already. Income statement on the annual side of things, it just in the last 2 years started to make money. Quarterly is doing fairly well in terms of it, but still only a 5% net margin. Now here's where the interesting thing that Max mentioned was on their balance sheet, total liabilities to their assets is finally down to about 80%, but it's still fairly high, okay? 83%. So they got it down below 100%, but again, total liabilities is still very, very high compared to what assets that they do have. A thing that we've talked about too with Carvana, if you happen to live close to one of their, car vending machines, I'd figure, don't whip out your camera every single time, but if you got one of those dash cams, compare your dash cams over time to see what is actually going on with that vending machine. It's actually a visual to see, are they swapping out inventory? Is it constantly new cars? Do you see stuff sitting in there for a long period of time? And in doing so, you can get a gauge as to see are they doing well? Are they rotating out that inventory and consistently getting new inventory, selling off those cars that are in that vending machine? So it's actually a way, most companies, you're not going to be able to go into that back room and see what inventory is, being pushed out and what's still sitting on the shelves. Carvana's got it kind of just displayed out in the open for you guys. So it is a way for you to get, an idea, a little bit of sentiment in terms of what's going on there. I do remember back during COVID and during, a period of time when a lot of inventory started getting extremely expensive, noticing what was going on that vending machine was really being reflected upon earnings. So it's just kind of a way for you guys to gauge that sentiment. Let's take a peek over. Oh, by the way, on the daily, and here's what I would say is we do have 2 more days until they are after hours on Wednesday. So we still got tomorrow and the day of Wednesday. I would definitely say we could see this just run up right before earnings, probably test out this 344 and probably back up toward 350 or so, and then the earnings reaction will happen after that. So you might have a chance to play a little bit of the upside in these next 2 days, a little bit of a scalp or day trade on this name. Let's take a look over at stacks. Let's reset everything. Carvana. Lots of unusualness coming out today. We got some calls being purchased for the 400 strike for September. We also have a short-term one in terms of August 15th, 420 strike. That would definitely be a little bit more of an earnings gamble that is a little bit cheaper for some of you to get into. But we also have these being sold off too. So they do not, I'll be honest, this is actually a pretty good position. Do you see, and I'll ask Max too, with PE being this high right now, selling off the 420 calls for 815, I think that's a solid play right there, right? If you're able to sell off that, you're going to be pocketing that $234, $42 right there. I do not see Carvana breaking 420 in the next 2 weeks.
No,
I mean,
not at all.
That's kind of ridiculous. So
there's a better chance it goes below 300 in the next 2 weeks than it does go. Because again, this is one of those, because EPS is like 600% expected year over year already. To your point, Eric, a lot of this might already be priced in. Yeah. So when we get to the actual call, we could see a sell-off, but that might be what the big guys want, because then they can buy more for cheaper at that point. Agreed. And they don't have to wait longer for a drawback. So there's more benefit, honestly, for them to tank earnings. There's more benefit for their long-term upside, because them tanking now attracts more investors for later. Because what was the first thing we said in their risks? This is expensive AF. Like, they're isolating a lot of people from getting into the stock right now with their price target and with how volatile it's moving and with how horribly it's trading forward. If we're being honest, I don't want to get into something that has a 100x PE. Like, that's insane. So, and I don't think most big funds don't want to do that either, unless they're playing both sides of the coin at that point. So I think this is definitely one of those situations where if that 420 thing plays out, hey, more power to them. But also, like, that is a lofty bet for 2 weeks out with a company that is this volatile. You gotta have some cojones on you.
Yeah, I agree. If you had the bankroll to do that, sell those calls for 234, very likely would end up pocketing that over the course of the next few weeks. Especially with IV being this high. It's at 72. Obviously not as high as some of the other names we've seen. But yeah, Carvana expected to beat But I would say with the beat, I would more likely than not see a sell-off versus a huge pump up higher. Of course, I could be completely wrong, but in terms of where the numbers stand right now, with the PE ratio that high, with their liabilities still being so high, unless they come out of out of left field with some sort of new announcement of sorts, this it's not breaking 420. That's what I'll say. It's not breaking 420 in the next 2 to 3 weeks. Could it break above 350? I think so. It's possible. We might see a small $10 to $15 move after earnings, but definitely not going to see it go up about $80 from where we're at right now. Okay.